下面是我们的免责声明。我们的讲座提供的信息仅供参考，嘉玉尽量提供正确的信息，但请您对信息的使用自行承担风险。在任何情况下，嘉玉均不承担任何责任。
Okay, now let me introduce today's two main speakers. So the first speaker is Pauline. Pauline joined JY Accountants since 2015 upon graduation from the University of North Carolina at Charlotte, where she earned a Master of Accountancy degree. Pauline is a tax partner and the lead of marketing and client relation. Her specialization is in real estate, commercial investment tax consulting. Prior to JY, Pauline was a supervisor in a hedge fund, private equity, and a real estate global fund service company. Pauline is also a controller of a local real estate investment firm. Today's second speaker is Connie. Connie joined JY Accountants in 2015 upon graduation from the University of North Carolina at Charlotte, where she earned a Master of Accountancy degree concentrated in tax prep. Connie is a tax partner and head of operation and human resources. Her specialization is federal and state tax filing and reporting for small business, individuals, and families. Prior to JY, Connie was a tax accountant at an international hedge fund service company. Now, our speaker will share today's topic with gift tax and how it affects real estate transfer. Please giving a warm welcome to today's speaker, Pauline and Connie.
Thank you, Jen. If you can unshare, I'm going to share the slides from my side. Slideshow. Did it work? Did you see my screen?
Yes.
Yes.
Okay, great. So,
okay, let me start it. Hi, good afternoon, everyone. I'm sorry. For some reason, I just lost my voice for a second. Welcome, everyone. My name is Connie. As if you guys familiar with us, we always like to start with a story. As you guys already know, tax law is very complicated, and as we read the story, read the law, we always try to pull our heads out and then understand. And today you don't have to do that, because we will share a story and then to help you guys to easy understand the tax law. So today's story is about Jack and Jessica. Jack and Jessica are engaged and heading to marriage soon. Jack is a US citizen and Jessica is a green card holder. Both Jack and Jessica lived in North Carolina. Jack and Jessica opened a joint bank account, and Jack transferred $50,000 into this account, planning to use this money pay for the wedding. Jack has purchased a house for $300,000 in North Carolina before he knew Jessica, and Jack is considering taking title with Jessica as joint tenants with right of survivorship. Jack and Jessica are not married yet. Okay, now has Jack made a complete gift to Jessica? And if so, in what amount? What would we suggest Jack to do differently from tax planning perspective? Pauline, back to you.
okay. Thank you, Connie, and hello, everyone. Thank you for joining us for today's webinar about the gift tax and how it affects the real estate transfer. So already we have know the story. Then now, firstly, we often got our clients, they are confused. Because sometimes they receive like big gifts, either from the family member or from, say, like a surprise. And they're wondering, do they need to report tax because they received this gift? So today, let me firstly introduce what is gift tax, so that we can later on answer Jack's question to help him to clarify the concepts. So first, what is gift tax? Gift tax is a federal tax imposed by the United States government on the transfer of property or money from one person, also called the donor, to another person, the recipient, when the donor does not receive full value in return. This tax is primarily designed to prevent individuals from avoiding the estate tax by giving away their assets before they passed away. So the gift tax is paid or reported by the donor, not the recipient. The donor means the person who gave away the gift, not the person who receives the gift. So from that perspective, we need to clarify that the donor has the responsibility to pay or report the gift tax. However, does any amount needs to be reported? Not necessary. We can see right there, there is an annual exclusion amount that every taxpayer are entitled to. So for this amount for 2022 was $16,000, and for 2023, it's $17,000 with a $1,000 increase. Also, if you have ever heard the applicable exclusion amount, also known as the lifetime exemption amount, this is like before Trump had the Tax Cut and Job Act in 2017. This amount was like $5 million around-ish. Then with the Job Act, the Tax Cut and Job Act, that life exemption amount was being like increased dramatically. Right now, this amount for 2022 was like $12 million and $60,000. And for this year, 2022, with an $860,000 increase, it arrived 12.9 million. But this is keep that in mind. This is a lifelong exemption amount, meaning one person can use this amount just one time in their life, and it's a cumulative amount. Okay.
Hi,
Oh,
Pauline.
go ahead.
So we're talking about gift tax, but now this the exemption amount is for estate tax exemption. So normally when we're talking about gift, it's always relate the gift tax with the estate tax exemption. Is that correct?
That's correct. These two tax, gift tax and estate tax, are most of the time they show up like they have a lot of relation to each other. But later on, we will further introduce how it worked out.
Sure, I'm sure everybody will be very likely to hear about that.
Perfect. So next, let's discuss who is subject to gift tax. Firstly, if you are a United citizen or a resident of the United States, you need to report on all transfers by gifts of the property whenever located, meaning that if the donor is either a U.S. citizen or a resident of the U.S., no matter where the gift located. It can be like, say, a house in a foreign country. If they give that away, they also need to report it. So it doesn't matter where the property is located, as long as the status is citizen or resident, they will need to report. On the other hand, if the donor is a non-resident alien, if the gifted property was situated in the United States, so only the property located in the United States needs to be reported. If it's outside of the United States, it's foreign, then you don't have, it's not subject to the gift tax if it's a non-resident alien. Now, some of the clients then ask, what if I pay the tuition for my children? Do I also need to report gift tax? Here are some situations. Those are excluded from excluded transfers of the gift tax. The first one will be transfers to the political organization. Often we will see like governor running campaign that ask people donate to them to raise the votes. Those are not considered. Those are is considered excluded transfer. Do not need to report it for gift tax. Second, tuition payments made to an educational organization on another's behalf, just like the case that I mentioned, it's excluded. Third, amounts paid to another on behalf of the medical care, so also excluded. But keep that in mind. Tuition and the medical payments must be made directly to the provider. For example, the physician, the hospital, the college. So you cannot give the money to your kids and have the kids pay the hospital or the college. And that will raise the gift tax issue. But you're gonna just pay the school directly, then it's excluded. The last one is satisfying an obligation of support. What that means is, so sometimes say if a family is husband and wife, they are divorced, and then say the child with the mom, but the court gave an order to the dad, then you have to pay for the child support, like how much money per month. That was considered as an obligation of support, and that is also excluded from gift tax. All right, so how do we report gift tax return? So to a lot of our clients or our friends, gift tax is kind of like not very familiar to them, because they are often familiar with the 1040, which is the income tax reporting. And gift tax is like completely different form. It's using form 709, and it's like usually you don't see that form that often. So it's a completely different tax category than income tax. So here's a picture showing you like the calculation, the steps on what's on the form 709. But if you have never done the 709 before, we will suggest you seek assistance with a professional who know what they are doing instead of DIY everything yourself. Cool. Okay, so here is like a very handy table that we can either make notes or take a picture of the screen. So on that table, you can find with different status of the donor and the recipient, how different the consequences will be on the gift tax. For example, if the donor is a US citizen, we will look in the first line, the first row. And then we will ask who is, what status is the recipient. For example, if the recipient is a resident, but that's a green card holder, then furthermore, if the recipient is the spouse, the spouse get an annual exclusion of $175,000. However, if the recipient is a U.S. citizen, the spouse will enjoy the unlimited marital deduction. But if it's green card holders, that's not unlimited anymore. You now have an exclusion for $175,000. And then for anyone else, like other people, the annual exclusion is only $17,000, like we have saw in the previous slides. So this is a very handy table. And if you have ever gonna have a gift tax with different status of the donor and the recipient, we can always come back and refer to this table. Then the annual exclusion and this exemption amount, they change from every year with the inflation adjustments.
I think this is a very, very good resource. So if you guys would like to take a picture, please go ahead. So Pauline, I have a question. So how does the IRS know if we give a gift to a person?
Sure. That's a very good question, because we a lot of people often like this, the gift tax is being overlooked, and some of us are thinking that, oh, they're gonna never find out, and then we don't have to worry about that. But let's see how IRS is gonna get to know when there's a gift happened, or the event that will having the gift tax effect. The first way they're gonna find out is when you file a Form 709. So you report it to them, of course they're gonna find out. Then if you fail to file, IRS can find out via an audit. If IRS do not find out during your lifetime, you got lucky, they could find out during an audit of your estate. Then it will hit your estate with the penalties and interest that occurred from when the gift tax return should have been filed. IRS can also use the public records, such as title transfers. Some states will aggressively track gifts and report to the IRS as well. So, so maybe now they did not find, like there's nothing happened. Say you transferred a house or give a gift, nothing happened now, but it does not that mean that they will not find, that there's a possibility they can find out during an estate audit, and then at that time it's going to hit you big. Right.
So they're gonna find out one way or another. So
but if the IRS audited and they find out, it says the penalties and interest will be accumulated and hit you accrued from when the gift tax should have been filed.
How about you share how much is the penalty with us?
Sure. So here is how much the penalty will be. They have two types of penalty. One is fail to file, one is fail to pay. So with fail to file, it's 5% per month on tax due, up to a limit of 25%. If late more than 60 days, there will be a minimum additional tax of at least $205 or 100% of the tax due. Then fail to pay is 0.5% per month, up to 25. But if IRS give you a notice and ask you to pay gift tax, but you ignore it, then it will increase the monthly rate to be 1% per month. So accumulatively, this penalty can be very big.
So if we, I mean, I think for this gift tax, is the area that we mostly will not pay attention to it. So if you do give out the tax, you probably wanted to learn about it and try to file it before IRS find out?
Right. Because most of the time you file the gift tax, it doesn't mean you have to pay anything. Most of the time you can use the credit to offset against the gift tax.
Oh, that's the very that's the most important part, I think.
Right. So that's why they have the fail to file and the fail to pay, two different type of penalty. Because you need to file, but it doesn't mean you have to pay, but you just need to file at the year when the gift happened.
Okay, sounds good. So let's come back to Jack and Jessica to try to answer their question. So first, Jack and Jessica opened a joint account, and Jack transferred $50,000 into this account. Has Jack made a complete gift to Jessica? And if so, in what amount? What would we suggest Jack to do differently from tax planning perspective?
Great. So as we mentioned before, Jack and Jessica, they are going to get married soon. So they opened this joint bank account. The main purpose of the joint bank account is to pay for the wedding expenses, such as book the venue, purchase the, like the wedding dress and etc. So now only Jack moved the money to the joint bank account, and Jessica didn't do anything. She didn't contribute nothing to the joint bank account. However, on this transfer, there is no gift happened. This is a very special rule towards the joint bank for bank account, applied to the bank account only. Is when if two persons open a joint account, it doesn't have to be husband wife. It can be brothers, sisters, or partners, or like the Jessica and Jack, their girlfriend, their fiancés. So it doesn't have to be husband wife can open joint account. Any two persons they can open a joint account. But on the opening of the joint account, or even after the contribution to the joint bank account, there is no gift happened. However, if Jessica now takes out money from the bank account, then that will make the gift event happen. But if just the contribution into the bank account, we don't have to worry about it. Only when if Jessica taking money out of the bank account, and that is when the gift are considered to happen. So our suggestion will be first of all, since they are trying to use this bank account to pay for the wedding expenses, there is no incentive for Jessica to withdraw money from the bank anyway. But if Jessica do want to take money out of this joint account, we will suggest she wait until they got married. Then she can take like the entire $50,000 out with no tax consequences. Or if Jessica cannot wait, she has to take the money out now in 2023. She can take less than $17,000 for 2023 without any gift tax consequences.
Okay, that sounds good. So let's go to the second question.
Okay.
Okay. So the second question is, Jack has purchased a house for $300,000 before he knew Jessica, and Jack is considering taking title with Jessica as joint tenant with right of survivorship. Jack and Jessica are not married yet. Has Jack made a complete gift to Jessica? And if so, in what amount? What would we suggest Jack to do differently from tax planning perspective?
Great. So as we know before, Jack had purchased the house for $300,000, and that was before he knew Jessica. So that before that house belongs to Jack alone. Now, Jack is trying to put Jessica's name on the title to own the house together as a joint tenant with the right of survivorship. Before we answer Jack's question, let's take a look of the different property ownership category. So commonly, there are 5 categories. Joint tenancy, also known as joint tenancy with the right of survivorship, tenancy by entirely, tenancy in common, community property, or fee simple. So right now, Jack owns the house just by him own, and that's fee simple. So it's fee simple, it's very simple. So it's just Jack owning the house by him own, that's fee simple. And now Jack is trying to do from fee simple to the joint tenancy. So let me introduce a little bit about the concept before we can answer Jack's question. Joint tenancy, also known as tenancy with the right of survivorship, means if Jack and Jessica own the property together with joint tenancy, they are considered to own that property 50-50. Then say if one party that on the title passed away, the property will automatically fall to the other person. So if Jack passed away, the property will now belong to Jessica. This property will not go to Jack's estate and go through the estate process, but it will just go to Jessica right away because it is with the right of survivorship. Whoever name left on the title owns that property right away. Tenancy by entirely, this is mainly happen to married couple. Joint tenancy is for people who have not get married. Tenancy by entirely is by married people, and usually it's also 50-50. The same like joint tenancy, but they are married. Tenancy in common is different. Tenancy in common, we often see like partnership owner. Sometimes the owner of the partnership owns one property by tenancy in common, and they can allocate to different percentage. Say 3 owners, they own 20%, 30%, and 50%. And tenancy in common, they can divide the percentage by belong to each one. If any of the owner passed away, the portion of that property will go to that person's estate and go through the estate process. Community property, that is mainly subject to the community property states, and North Carolina is not a community property state. As you know, we are accountants, we're not attorney. Basically, we introduce concepts so that we have an understanding, then we can make a judgment on how the tax treatment will be. And if you have the further questions or about the legal terms with those ownership types, we would suggest you consult a real estate attorney that you might find a better answer. But now we have understanding about those terms, and now we can come back to Jack's question. So since now Jack wants to add Jessica's name on the title as a joint tenant with the right of survivorship. So yes, this will trigger the gift tax effect. So the answer will be yes. When someone purchases property and put another owner, non-married, with them as joint tenants, a gift is made, especially the amount of the gift when the owner owns does not pay. So Jessica do not pay. And then it will be an equal ownership, which here is 1/2 due to there's only 2 owners. And therefore, Jack makes $150,000 gift to Jessica because he purchased the property for 300 and one half is 150. Now, we would suggest that Jack and Jessica got married when the marital deduction is allowed for Jessica, because to get the exclusion for the $150,000, then there will be no gift tax being triggered for the action to add Jessica on the title.
Okay.
Does it make sense?
I think so. So Pauline gave out a very informative information to all of us, and hopefully, as she explains, and she will also clear out some of your question as well. So so let's go to the other question. So what if everything else is the same, but now Jack purchased the house for $500,000 instead of the $300,000?
Okay. If Jack purchased the house for 500,000, then now one half of 500 is 250. So now if Jack, if she add Jessica on the title, it looks like it's the same as he makes a 250,000 gift to Jessica. And as if you remember, the setup of this story is Jessica is a green card holder. She is not a U.S. citizen. Since she is a green card holder, even though Jack waited after they got married, then take Jessica together with the title, only 175,000 is excluded from the gift tax, and therefore the remaining 80,000 is still subject to gift tax consequences. And let's review the table again. So Jack is a U.S. citizen from here. Jessica is a green card holder from there. So Jack is the donor. Jessica is the recipient. You can see, even though she becomes the spouse, annual exclusion is only 175,000. But the gift itself is 250,000. It's exceeded this annual exclusion. So the additional $80,000 is still subject to gift tax. If Jessica was not Jack's spouse, she is others, then the annual exclusion is only $17,000. So the even bigger portion will subject to the gift tax.
Wow. So I think the gift tax is kind of complicated, even though, I mean, we because this is not familiar with everyone, and then everybody have different situations. So if you have a gift, if you make a gift, you probably wanted to consult with professionals to see if there's a tax consequence for the gift.
Yeah, often we saw, say, if like kids wants to purchase a house and the parents will give them like a gift for the down payment, like 50,000, 100,000, and then the banker will have the parents sign a gift tax letter, and that will be considered a gift event. Usually that amount will exceed the annual exclusion, so we will suggest if you ever have that happen, you will know there might be the gift tax consequences with that letter.
Okay.
But the good news is, even though they need to report gift tax, it doesn't mean they have to pay. Oftentimes we can apply the credit to against offset the gift tax, so there's no payment needs to be made. If you choose not to apply the credit, the gift tax rate is 40%. It's very expensive.
Yes. So yeah, I still remember that there's a lifetime estate exclusion.
Right,
So
like we saw
still-
before, the 12 million. So it's very big.
Mhm.
We can use that to offset the gift tax.
Okay, so just remember to report it. So
Yeah.
we won't so that won't come back to bite us later.
Right.
Okay, so now we have this extended question about Jack's parents. So Jack is the only son of his parents. Jack's parents are old in age, and they owned a house in North Carolina which they purchased in 1990 for $50,000, but now it worth $300,000. Jack's parents are U.S. citizens, and they are thinking about giving this house to Jack. So what do you suggest, Pauline?
Awesome. This is a very good question. And then first, let me introduce the difference between the gift and the estate, and then we can look at the numbers to see what's the best step to take. So the biggest difference between gift and estate when subject to the real estate transfer is gift will take the a gift carries over the cost basis of the property. Often the cost basis is how much the property was initially purchased, plus any improvements made to the property, and take away any depreciation have taken. So the cost basis will be like the purchase basis, like less the cost basis. Estate on the other side, it can take the step-up basis to the fair market value at the death of the date of death, or at alternative evaluation date, which often is 6 months later. Then what is step-up basis? A step-up in basis or a step-up basis is what happens when the price of the inherited assets on the date of the decedent's death is above its original purchase price. The tax code allows for the raising of the cost basis to the higher price, minimizing the capital gain tax owed if the asset is sold later. So in other words, gift step-up basis is like a big gift that the government give to every person, but you can only use once in a lifetime. So let's take a look at the numbers to see how big the gift is. Okay, if you can see the table, we can see Jack's parents. The purchase price is $50,000. The fair market value is $300,000. If we sell the house now, the sales proceeds will be the same. Under the gift or the estate will both be $300,000. However, Jack's basis is different. If the gift is being given to Jack when the parents still alive, the basis is only $50,000 because it used the carryover basis. However, if it's through the estate, the house will enjoy a step-up basis and bring up to fair market value to $300,000. The capital gain, 300 minus 50 equals to 250. Capital gain from estate, 300 minus 300, 0. And then the capital gain tax, we're just gonna use the cap rate, the top rate, 20% plus 4.75%. That's the North Carolina income tax rate, and times the $250,000, we got $61,875. And on the other side, if it's an estate, 0 times that rate equals to 0. So you have 0 capital gain tax to pay via an estate. So you have like $60,000 capital gain tax via the gift. So if you are Jack, which one would you choose?
So from the number here, we obviously doesn't want to pay the tax, of course. I'm sure nobody wanted to pay tax. But if you have other concern, maybe concern about there's a probate or something, a very complicated case in the life, so you might be thinking differently. So we as professional, we suggest that you will have to look at the situation of your own. So one strategy fits one person, but it doesn't fit for everyone. So this is very personal tax planning. So if you have if you have like questions or gift you wanted to discuss with your accountants.
Yeah, I agree with Connie. 'Cause everyone's situation is different, right? You often get an answer from the accountant's attorney say it depends, and that's really indeed the case. Because right now we're just simplified the cases with Jack being the only son, but in reality, it can have many years, like multiple children, and then the parents say their health condition will be like not in good shape, and they might be not mentally applicable to make this selection with the estate. So yeah, and like Connie said, there's like probation process with estate as well. Some people might do not want to deal with that. A lot of these things to consider when we want to make this decision to treat the property as a gift directly or left that with the estate. Or maybe you're like a very rich person and then you already exceeded the 12 million exemption, then we might have other planning and consideration options for that situation. So yeah, everyone's situation is different. So it's like not, maybe some people rather to pay the capital gain tax than to save the trouble just to get that done. We have saw that before with other clients. Cool. This is pretty much today's webinar, and thank you for everyone sticking with us. Now I'm gonna give back to the host. Jen, you muted.
Yes, thank you, Pauline and Connie, sharing those important information with us. Everyone have their different situation. If you want to know whether there's some tax strategies are helping you with your tax goal, you can welcome to make an appointment with Pauline for a tax consulting 1-by-1 section by calendar day. Let me share in our contact on the okay, this is our contact information. You can, if you have any question or want to make appointments, you can use Calendly, or you can call our phone or send email to contact with us to make appointments, have a one-by-one section with Pauline or Connie. Also, if you're interested in our webinar, you are welcome to subscribe our newsletters through our website as well. We also have Facebook, Twitters, and Instagram as a social media. You can follow us to have updated information. Okay, this is the link through our webpage to make a section with Pauline by a calendar. So just click on website book now, then you can confirm the time and information to have Pauline call you on the time you made an appointment with us. Next slide is our business. Our firm provides services both for business and individuals. For our services, including business solution, business annual tax, business registration, COVID-19 tax credit application, and notary services. For the individual service, we provide individual annual tax return filing, tax planning, state and local tax, and we also provide second opinion on previous tax return. If you have any questions for your previous tax return, we can take a look and give you advice as well. So you can feel free to contact us through the phone or email anytime. Now, today's webinar section is finished. We have the Q&A section. So if you have any questions, we can discuss with Pauline and Connie now.
Okay, I saw one question in the chat. Li Ming asked, I came in late, can I have the recording? So as Jen had shared in the beginning, our recording will all posted on our website on the resource page. It's gonna be like a YouTube video, and you can have access to that 24/7. So we will later on, once the recording is finished, we'll post that on our website.
It's just as I showed before in jyaccountants.com, the website, the resource page. All the videos are posted on the resource page.
Right, and if you are interested, you can watch our previous webinar. We have both in Chinese and English, and mostly in Chinese. So we're trying to do more and more English webinar, so that our English speaking clients can also, have the access to those knowledges.
Do you guys have
Great.
any questions about the gift?
Does anybody have questions? Want to discuss with Pauline and Connie? We have 5 minutes to discuss. Today's video, we also have Chinese video. We'll both Chinese and English for this topic. Same topic, we'll post it on our website. So it will be got a link to the YouTube's.
Yeah, we did the Chinese version on Monday.
Right.
So we usually will send out 2 newsletters, one in Chinese and one in English. And before we send the newsletter to everyone, So our English clients come back to say, could you say that in English?
That's
So
why
now we're doing two different newsletters so that both we can see.
I guess Claire, I think Pauline, you're doing a great job to explaining the gift text, and everyone sounds clear, so they don't have any question yet.
Oh,
So-
we got one question.
Okay, we got one question.
If you want, you can just open the speaker and say the question. You don't really have to type if it's like. Okay, Jen, would you like to read the question?
Sure. Let me see. So the question is, does the 12,920,000 exclusion mean only above that amount the recipient will have to pay estate tax? Is
For-
For 2023, yes. For 2023, yes. Because that amount is subject to change. It's a sunset, like when Trump did the change the job tax cut and job act, he bring that amount to double, but that amount is sunset to be back to like 5 million in 2026. So it depends on if say the person died in 2023, then yes, you can. That's the personal exclusion amount for 2023, and then any amount on top of that will subject to the estate tax, but that's just on the federal level. On state level, there might be a different exclusion amount to look up.
I have additional questions. If we reported the gift use 907 form, what is the gift tax, the amount will be used for? For example, I reported 2023, but the people that after like 2030, so which year's exclusion will be used for?
So when people are doing the estate, you will look at the lifelong of how much tax how much gift you have given. Any of the gift has applied to using the lifelong exclusion amount, and then it will be recalculating from the beginning to the end. So it also depends on the year the person passed away, and that is the year exclusion total is the year being used.
So the total exclusion depends on what year.
Right,
the
it will
death.
change.
Sure. Thank you.
老师，我想问一个问题，
请
能听见吗？
可以，请说。
是这样，就是我之前好像听的有一个概念，好像是说，如果是这个citizen 和 citizen，就是把这个estate 转移的话，尤其是夫妻之间是没有 limited 的限制。然后，如果是说这个 recipient 是夫妻双方有那个 recipient 是一个这个绿卡，或者就是反正是non citizenship 那种，他就这个转这个 estate 的时候就会有一些金额的限制，是吧？有这么一说吗？
Okay, let me translate this question. So during the couple, both citizen of United States don't have any limitation, but if not a citizenship during the transaction from the couple's husband and wife, is that any limitations?
That's a good question.
You will share the screen of share that slide that we have.
Oh, I think she's asking about the estate tax. The screen that I had only have gift tax, do not have the estate tax. So you are saying if the recipient is a say green card holder or
green card holder.
green card holder. Then yeah, there is not unlimited. It's not unlimited. There is an exclusion, but the amount is how much I cannot remember at the top of my head, but it's not unlimited. Only US citizen to citizen is unlimited marital deduction.
So only the identity of recipient would matter, whether there is unlimited or limited.
Say that again?
I mean, whether the transfer among couples has some limitation depends on the recipient's status, ID status. Like, is she a citizen or a green card holder, right? No relationship with the donor.
If
that
the donor, yeah, I think for estate, it also has the similar table like the gift tax. Say the donor is a non-resident alien, then it will have difference. So if the donor also depend on the status of the donor, citizen, resident, green card holder, non-resident with transfer US property, and the non-resident transfer non-US property. If it's a non-resident transfer non-US property, like we mentioned in the slides, there's nothing to report. Because it's a non-resident transfer non-US property, so have nothing to do with US. So there's nothing to report with the estate. But it's if it's a non-resident alien transfer US property, then if the donor is a non-resident alien, then if the recipient is a US citizen, then it has unlimited marital deduction. But if the recipient is a green card holder, then the exclusion amount is very low, like 60,000 something. I don't remember. And there was like a case on the news last time with like a parent like accidentally passed away and then left like 3 or 4 houses to their kids, and they're non-resident alien, and then the kids have to pay a lot of money to get those properties. I remember that was like a couple of years ago. There was like case on the newspaper. So it also depends on the donor, the status.
Okay, so if the estate is transferred from a green card holder to a green card holder, there should be have limitation.
Yes.
Even they are couple.
Yes. Green card holder to green card holder do not have unlimited marital deduction.
Okay, and the exclusion is far below the $12 million.
Yeah, 12 million.
Okay.
Right now for 2023, 12 million.
But the 12 million just for the gift transfer amount limitation. If it apply to the estate, what is the limit?
The gift, the 12 million is the estate. The gift exclusion is $1,700. Annual exclusion for gift, $17,000. Sorry, $17,000 is for gift. And above that amount, then you're gonna to against your lifetime exemption, which is the estate and the gift use the same exemption amount, the 12 million. So if you give a gift above $17,000 and that person is not your spouse, then the exceeding portion will be used to against the 12 million.
Okay, so if just for the estates transfer among the couple, and the transfer amount also apply to 12 million exemption, right, among couples. Only the transfer amount beyond 12 million, it will have estate tax applied to the recipient.
Connie, can you answer the question?
啊，我直接说中文好了。
哦
呀
，sorry，
就是我刚才听您的意思，好像是说，就是这个1292万只是对这个 gift tax 而言，但如果是这个 estate 的话，然后是在夫妻之间转，然后比如说这个过世的这个是绿卡，然后这个survivor 也是绿卡，那他这样转的话，是不是也可以？就是只是1292万以上的才需要交 estate tax？
应该是这样的。
夫妇之间不是有 exemption 没有 limit 的吗？两个都
没有，它是 green card 的，
哦，绿卡。
它是 green card 的，
如果
但是
citizen
有的。
的话就没有。
我
OK，
好像原来听其他的讲座，印象中好像这个limitation amount 特别的低，没有到1292万这么高。
绿卡是跟外国人一样的吗？
我忘记了，我要再查一下，因为我这次准备的没有准备 F date，我只准备了 gift。
还有这个，就是这个12 million 这个是，就是川普的那个税改以后才把这个 amount double up 的，原来的 amount 没有这么多的，才5个 million，对吧？5个 million 多。
对，
所以如果他到了那个 2026年 sunset 之后呢，那个 amount 如果他们没有 extension 的话，就会降下来，就可能只有5个 million。
嗯，哦，这个知道。
嗯，
好，谢谢。哎，但是刚才您好像是说到有一个16万的那么一个限制。
16000是 gift tax 的限制，就是不用申报的那个，对吧？
哦
16000就是16,000。
你是说60万啊？不是60,000的吗？还是 16,000？60还是 16？
我刚才好像听到了有一个 estate 它的转移是有一个16万的那么一个 limit，
6万。
没有
没有这个数
16
是吧？
万，
那可能
没有
听差了。
16万。
OK
Non-resident alien 是一个特别低的。
OK，好，那没问题，谢谢。
好的，那我们时间也差不多了
好的。非常感谢各位参加我们
啊，
的
是英文。
哦。
你还
OK，
在录吗？
switch to English. Thank you everybody to come our webinar. We have webinar every month, almost in the third week. We will send a newsletter, and if you interest our webinar, please register. And at the time, we will have a video and also have Q&A section. You can discuss the topic with our speaker. Thank you, and see you next time. Have a great day. Bye.
Bye.